Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. I posted a chart here. Remember, week ago Tuesday, we had a week ago today, let's put it that way. As you can see, this is the chart of the Nasdaq banking index. Now, I know it has different symbols on different platforms, but if you check it, you can find it very easily. And what I want you to see here, folks, this is a perfect Gartley pattern, folks. On page 222 in Gartley's book, Profits in the Stock Market, $1,500, 1937. You've been there, heard that. But you're right at a 382 retracement. The AB leg is equal to the CD leg in both price and time. And you can't make these patterns up, folks. You got to pay attention to this one because Gartley said the best trade is to find an ABCD in a bear market and sell it, or find an ABCD in a bull market and buy it. He said that is the best pattern that you could possibly get. He spent 2 full pages describing that, folks, on pages 221 and 222. On 222, he put the picture. When I saw that picture, that changed my life because I said, hey, I can deal with this one. And by golly, it's been treated me pretty good through the years. Now, days like we're having today, folks, is something like unbelievable. But before we get to that, we've had a request to take a look at something from Australia, and I wanted to bring this to your attention. This happens to be a, excuse me, folks, this happens to be a penny stock, okay? But I want to bring this to your attention because I had to help this young man because it was a little bit of a problem with his pattern. I mean, he has a nice tool to draw it, but the problem is if you don't put it in the right places, you're not going to get the right answers. Okay, now this stock is called MEI, and he bought this for a penny a share, folks, back here, all right? And it's up here, and now it's trading right about here, as you can see, right in the middle there. He asked me what he should do. So the first thing I said was, this is not a good X point. Where he starts his X point right here is not good. The reason why is there's no swing. Here's the X point, either here or here. Here is where it explodes to the upside. But that is not an X point. That has to be a low. It has to be, a low somewhere in here. It's either got to be this one or here. Now, this one makes it fit pretty good because that would make a 61% retracement, or this one. Okay, that would be all right. But my suggestion to him, because it's a penny stock and it's trading, he's made 12 times his money, folks. And I gave him a choice. I say, hey, look, put your stop really close or let it rip and put your stop at a nickel. That way you'll get out at 5 times your money. And I know his answer was, but I want to get out at the most possible money. Well, hello, operator. Not everybody gets that. Remember, that's one of the greatest fears, fear of missing out, or no, fear of leaving money on the table. And that's a toughie. But anyway, the main reason I'm showing you this is you have to be able to pick your X point in a Gartley pattern. It's got to be the highest point or the lowest point. That's where the swing starts from. Now, if you have 2 points that are equal, it doesn't make any difference whether it's the first one or second one because that's a double bottom or a double top. So pay very, very close attention to that. That's quite important. Now, I wanted to review what we were looking at yesterday before I lost internet connection. We had a hailstorm here yesterday that knocked out internet for about 5 hours. Everything's up and running today. Tomorrow will be an historic day here in Tucson. We're probably going to have a record low. It might break $19 to 19. God, hello, operator. It might break 19 degrees on the downside. That's our coldest day ever. 1995, we were at 19 degrees. We might break that tomorrow. We have snow forecast, especially in the mountains behind us. Mount Lemmon at 10,000 feet will have snow for sure, and we might even have some on the ground here. In the 30 years I've been here, folks, we've had 2 blizzards. I mean, real blizzards, with 4, 5, 6 inches of snow, and it melts right away, but, they were actual blizzards. Okay, yesterday we were talking about something. I got a few chuckles because it was, someone said, well, that could probably not going to happen. But if we take a look at the chart that we were looking at yesterday, I want to get this up here. You'll see here, this is the chart that we were looking at for live cattle futures, April live cattle. You'll see we'll be making this really nice 3 drive to a top pattern, multiple ABCDs, AB equals CD perfectly. You can see from your AB leg to your CD leg, everything lines up here at $1.65. And I mentioned, when cattle were $1.70, in 1977, when cattle were $1 a pound, the housewives of Beverly Hills were actually picketing in the street on Rodeo Boulevard in Beverly Hills. That's Beverly Hills at $1 a pound. Hello, operator. Now it's $1.65, and there's nobody in sight. But everybody said, well, they're probably not going to top there. I don't know if that's the case or not. But for one day, you'll see that if you did that, you're basically in a risk-free environment now, because the market has broken more than $0.015 or $600 in your favor. So you have your choice of putting your stop at break even on that, or you can just let it rip and keep your stop at break even at 165. That's what I would suggest to people to do. I haven't traded cattle for a very long time. I've never traded cattle for the 24/7 people, mainly because we keep it to the financials. We do some grains. And speaking of some grains, if you remember, we were looking at the price of soybeans yesterday. And soybeans making the same type of pattern that we were looking at, the same type of a 3-drive pattern that we're seeing here in the, hold on one second, in the cattle. We were also seeing that in the soybean market. And we're going to get that up here so you'll be able to see it. And again, I wanted to bring to your attention here something that's relatively important, and that is picking the absolute lows and highs of where to draw these things from. Folks, if you've got a low right here, this low is more important than that low, right? Now that's an important low, and it's more important than that one. So always pick the lowest point. This is a high, but this is a higher point. This is a high point. This is a high point. This is a high point. So pick the high points. That's what you're looking at. All I'm doing here is, when I'm looking at this, is I'm looking to see the relationships of these as they move together. Now, the sale up here was at 15.55. The high was 15.56, and it's dropped 20 cents a bushel from that level. So again, there's you're at a break-even trade, and you can either lock in a profit or let it go at break-even. That's a choice that you have to make. Remember, these things work about 65% of the time, but the payoff on the darn things is 3-to-1. That's what the Floor Trader's Handbook has proven without a shadow of doubt. It's 3-to-1 payout. You can't beat that kind of stuff. That's what makes it so interesting. It's all about how much money you don't risk, or how much money you risk, not how much money you make, folks. We got to pay a few bills. We'll be right back. 877-927-6648.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I want to put a chart up here of the Nasdaq as of yesterday. I wanted to point out a couple of things. Now, this goes back over the last 10 days. As you can see, folks, we are in a downtrend from that February 1st high that we made. You can see the lower tops that are through here all the way. That's the definition of a downtrend. Lower bottoms, okay, lower tops. Now, if you go from the 382 that we made yesterday, you start making higher bottoms, okay? That's basically, you can see the 382 retracement. We stopped right here for most of the day yesterday. Of course, late in the afternoon, the market did go a little bit higher. But I want to show you, you talk about these numbers, and we talk about them all the time, but you don't really appreciate their value. And remember, this is the wildest thing going. This is like the pork bellies of financial futures, folks. This thing rocks and rolls. But look what happened here into this report that we had, this CPI report. And didn't make any difference whether you think it was bullish or bearish. They had something there for you. But look at this, folks, really important. There's your 382 pattern right here. And you can see the 382 pattern that was right here. Okay, folks? What you don't see here is that we were at a 50% level here before the report. And then after the report, the market came down and then rallied 200 points to stop exactly at the 61% retracement of the high we made back on February the 2nd. Now, the only way that this can work is if the people that are running these computerized programs know what these numbers are. And if you put a computer to work and ask it to search for certain things, it's going to give you some information that's going to be very, very important. I've told you, folks, that I've owned several MIPS computers over my course of my life. The first one was back in 1990, had another one in 2008, and I still have that one. But the other one, that we wore that one out in 1990. That's the one we got our artificial intelligence program from. But if you put the data in there, and what we used was 2-minute data because that showed that it was the cleanest of all. The 4-minute was almost as good as the 2-minute, but the 2-minute was just a tiny bit better, so we used 2 minutes. And it looked at all the different swings and all the different patterns, okay? And it would show that certain patterns would repeat over and over again. In other words, Andrew Lowe said, Markets repeat with regularity, okay, and it can be predicted within limits. And that's what you're trying to do with pattern recognition. So with that computer, what it did is it showed all these different relationships. Well, when you started to look at them on the chart, you realize what it was doing is just catching these normal sequences of 618, 786 for retracements, 1.27, 1.618 for expansions. Now, how can it do that? Now, I'm going to show you one of those where it doesn't work, and I'll show you that in just a second. But I want you to see exactly what that did today, because that tells you this trend is still down until we get above that 61% retracement. Now, of course, this is pretty wild, the Nasdaq, but the S&P can be equally as wild. And I want to show you this one because it's really important from a technical standpoint, because you're going to see it just like I did, because I was watching it happen. Did I make any money off this? No, I actually lost 5 points on the darn thing. I made it up in a couple other things, but it happened so fast that I couldn't take a profit. That's how quickly it happened. Look at this morning, folks. Right there is where we sold. I sent the video out on this an hour before it happened to sell it at 40.60. The high was 40.62. I said I had a 5-point stop. Then the CPI number came out, and it dropped 30 handles all the way down to 40.30. Folks, this took 6 minutes to move, hello, operator, 70 points up and then 80 points down. And look how it made 80 points down. It breaks down, rallies up to an exact 61% retracement, and then goes right down to make a perfect ABCD. ABCD. So I sent another video out, and while it's on its way up, and I said, watch for this level right here. And of course, by the time I sent the video out, it was probably down in here, but we went all the way back down to touch the low again. So these numbers, they're in there, and that's why these algorithmic traders are using them. Now, do they make money on it? Don't know the answer to that, but somebody has to be pushing buttons on every single one of these. I did every single one today. I did gold, I did treasury bonds, I did the euro, I did soybeans. All of them did exactly the same thing. And that's what's really exciting, from my opinion. Now, let's just take a look at the gold market today, because this is one that we did do. Now, I can't tell you how often we see these things, but let's just get up here. This is the shorter time frame in gold. All I want to do is go back over the last highs. All we were looking for, it was 5 days ago. We were looking for a 382 retracement of this move, and it came in right there. You can see the 382 retracement, okay? What did it do? It broke down, then went up to the 50% level, and then went down again, and then up again. That's a $70 an ounce move in gold, $7,000, folks. Down, up, down. I mean, unbelievable. And we took this low out, and we're heading towards what I believe is going to be major support, and that's going to be somewhere around 1845 to 1840. We've covered that over several other videos, but that's exactly what happened. Now, should we start to get above this level, then you're going to be looking at something even more dramatic. But you got to pay attention to these numbers. Well, you don't have to. I pay attention to them, and I'm excited about them. Hey, if you can get somebody that's my age to get excited about anything, then that's what you should do, in my opinion. Let's look at the S&P from yesterday again. Great learning experience again, and that's one of the things that you really enjoy doing when you get people to start to realize this. And it's starting to work, folks, because I'm getting emails back saying, by gosh, it did work. There was your 382 in the morning. Okay, that was off the low Sunday night, right to the tick, absolute perfect at 40.60, and then boom, away she goes. The high happened to be 41.90 today, folks. That was one of those that went through the numbers by a huge amount and then just completely reversed. Now, that means that somebody got trapped on the wrong side, and that's why they had to cover whatever it happened to be. And that's why these numbers don't work all the time, but they work most of the time. And that's what's really exciting. And then after that one, remember, it went to 41.90 and then dropped 80 handles, $4,000, and then up $3,000. So this volatility is, it's incredible. Now, I try not to trade the really crazy ones, but that one happened to be pretty good. The problem was never made any money, because by the time the order, it took 3 minutes for it to go from 40.60, okay, all the way down to, 41.60. Let's try that one more time. It went from 40.60 all the way down to 40.20, and then from 40.20 to 41.90. I mean, that's how big the swings are. And so that's why you got to be really careful here. And if you don't use stops, you could be in big trouble. Please remember that. By the way, those of you that would like to listen to my show a second time, it's going to be quite a bit differently because I'm going to be talking about stocks and overall indicators in the stock market. That'll be at 3 o'clock this afternoon. I'll be doing Tom O'Brien's closing show. So let's take a little break. 877-927-6648.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, I posted the chart of the crude oil over the last several days here, and you'll be able to see here that it has some pretty big swings. You'll notice that the very first low was an exact 382, and then we went up and made a new high. And then, of course, we had a 2-day stint here, a day and a half, where we were looking for the market to come here. We planned this when the market was right here, folks, because what we have to do is when you make a higher high, you have to adjust the 382 to get the higher number. And you can see this number is higher than that number. But if you take this low to the high to this low, that's exactly 78%, folks. And it hit it right on the money within 2 pips. And it continued to rally exactly up to the 61% retracement, which it hasn't exceeded it as of yet. checked it a little while ago, and that's a $2,000 move in just a matter of a very short distance, and you're only risking about 60 points. Well, that's a 4-to-1 payout. That's a really great payout, because on an ABCD you're looking for usually around 3 to 4 to 1, and on a 382 you just never know. But when you get 4 to 1, you feel pretty happy about it. And as you can see, that's a very, very important low, and it's important low for one other reason. If we break below that, that's telling you that this trend that we've been going on here for 5 or 6 days is now over, and we're getting them ready to make a larger correction down into this area. So that's what we're watching here as we look at these patterns and swings that we're paying attention to here this morning. There's a few others that we wanted to talk to you about. One of them I wanted to mention to you folks. People talk about the meat markets and stuff like that, but I want to show you. I showed you the price of cattle. That was the price of cattle topping up there at 165. But let's just take a look here at the price of hogs. Now, hogs important because in Asia, it's a premier meat. I mean, all of China, Hong Kong, Malaysia, all those. Well, Malaysia not so much because they have a lot of Muslims there, but you'll notice here that look how low the price of hogs are. We're at a yearly low down in here when we made this 3 drive to a bottom pattern. Now it's starting to move to the upside, which is pretty good. But look at the relationship between hogs and also to cattle. Cattle making a high at 165, and here we have hogs down in here. They're different commodities, folks, and in different parts of the world they're treated, totally different. So you've got to look at each one separately. That's the main thing. Also, I always talk about live every day in an attitude of gratitude, which I really, firmly believe that. But the thing that you want to pay attention to now is we're going to take a free trip, folks. We're going to go to one of my favorite places to visit, and that is Istanbul and Ankara over in Turkey. Let's get this over here so you can see it. I want to show you the relationship, folks, of what's going on in Turkey. And that is the relationship of the dollar versus the Turkish lira. Look at this, folks. We had this huge move up here to 12. It backs all the way down to the 61% retracement. And look at this. We're making new highs up in here. Folks, this really hurts anyone in Turkey that is buying anything related to U.S. dollars. And some stuff that has to be converted from dollars, like crude oil, things like that. If you want to buy gold, and it's going to cost you a fortune, so that's where it's getting doubly hurt. And then when you get hit with 2 7-point earthquakes, and that really puts them in between a rock and a proverbial hard place, because the earthquakes, the worst is those doggone tidal waves, of course, and then tornadoes. Those are the 2 number 1 things. And of course, the tidal wave is related to the floods and stuff like that. The earthquakes, I've been in 3 7-pointers in California. And they were, they shook the house, broke some glass and stuff like that, but the roof never caved in. But remember, I was buying a newer home in California. It was only, I think, 15 years old, and by then they had changed the building codes. Some of these older houses, they didn't fare so well. But I've been through those. But these houses over there are not built very well, and they cheat on the materials. And then when something happens, you see they have 35, 40,000 people die mainly because of collapsing. It's probably going to be over 50,000. And stop and think, folks, 50,000 in a little small, country like that. Remember the earthquake? Let's try it again. The tidal wave of Christmas Eve in Thailand, where it wiped out several islands up in there and killed 250,000 people in one day. With that tidal wave that came in. I mean, I had a student, a dear friend in Phuket. He lived on the east side of the island, which was the side that got hit first. And he had not left the island for, oh my gosh, it's been 7 or 8 years. And his wife wanted to go Christmas shopping in Hong Kong. And so they went Christmas shopping in Hong Kong, and they were watching it on TV. When they got back about 3 weeks later, when they finally got to their house, and they had a beautiful $1 million home, which is equivalent to about a $4 or $5 million home in the United States, there wasn't a scrap of paper. The foundation, some of the concrete was still there, but everything was gone. His safe, which he had a bunch of stuff in it, was gone, but there was nothing there. Fortunately, he was well off, that it wasn't devastating to him, but they moved up to Chiang Mai, Thailand, northern Thailand, because they didn't want to go through that again. Probably wouldn't have to for a couple hundred years. But anyway, that's how devastating some of these things are. So we have to count our blessings. And, here in Tucson, we're complaining that we had a hailstorm yesterday, and we got more snow coming in tomorrow. And tomorrow is supposed to be our coldest day of the year, but we're going to live it and enjoy it. And that's about the best thing you can possibly do. So that's your trip over to Istanbul and Ankara and to Thailand. So those are a couple things that I had to bring to your attention, because I have to, we're so lucky where we live, folks. I mean, it really is. Even we got some things that are, messed up, it's still, we're pretty doggone lucky. That's basically, the bottom line of what we're looking at as we go through some of these charts and things that we go through. And the recessions, who knows where it's going to go. Folks, that's why I'm a pattern recognition trader, folks. I don't get bogged down. And believe me, people bring it to my attention, and I have to sometimes say, embarrassingly, that, look, I don't look at it, I don't need it, I don't want it, and I don't want to hear about it. And so I don't pay any attention to it. And it's a hard thing to not do that, because sometimes in conversations, you're supposed to know something more than you do. Like these Chinese balloons or whatever they were. I didn't know. I heard that they were UFOs. I didn't know they were shooting at balloons until like a couple days later. I'm playing poker in the Super Bowl, and they're talking about these UFOs. I didn't know they were talking about a Chinese balloon until I had to check it when I got home. It was crazy. Anyway, that's what I'm looking at today. So let's keep it. We have a break coming up here. 877-927-6648. We're going to answer some questions when we come back. But before we get there, I wanted to bring one other thing to your attention here. If you'll give me a second, and I will have it for you. That's in the gold market, because I want to show you the importance of this number that we're going to have here in gold. And we're really close to it now, folks. We're getting down very, very close. That number is right there where you see this little thing right here. That's at 1840. So 1840, 1848. Watch that very, very closely. The reason why, it's a 382 off this low that we had back here. Remember, that price of that one was 1618 to the tick. And that wasn't done by coincidence. 1618. And if that's the case, and this is the low down here, you're looking at gold at 2750 per ounce and silver at $60 an ounce. 877-927-6648.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with a 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD, Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, I posted the chart here of this, an hourly chart of the S&P, of course, going back quite a few days. But you'll notice that the low that we made here on Sunday night, that was on Friday, was very, very important. And we were thinking that we could make a slightly lower low coming down here at maybe 40.85. That was 40.58. 40.48, not 85. 40.48. The low here was 40.62. And so what happened was we didn't do that. We got down to about 40.75 here on Sunday night. And then, of course, the market exploded. We went all the way up. You can see if there were people that had stops up here at 41.90, they would have been filled. And then it dropped 80 handles. And, that's just a function of the volatility of the market. And when an announcement comes out on the CPI number, all kinds of rumors are circulating. If they forgot to factor in this, factor in that, all that stuff. And folks, I'll tell you, that's where you drive, that would literally drive me crazy. All I try to do is to look at the numbers, because the numbers I can understand, and I look at them and I see them over and over again, so I believe in them, wholeheartedly. Now, the only way you're going to learn that is if you practice it yourself and learn to do what these numbers are. And I'm not saying this is the holy grail of trading or anything, which it certainly is not, because there's a lot of losses involved and there's profits involved too. But the main thing is it describes what the market structure is going on in a market, with the exception of the fact that why the market went from 41.90 all the way down to 40.11. Why wasn't it breaking out to the upside when it broke above these stops here and all these trend lines that were right here? All it did was it cleared these stops out right here, just takes them out, and then boom, down it comes again. All I do know is when we get below this number, if we ever do, and if we ever do, then that's something that I really want to pay really, really close attention to, because that's something that we can use, all the time. The other one that I wanted to talk to you about that I'm always very fond of, and that is the silver market. I wanted to get this to your attention because we had a pretty rough idea that silver was not going to hold the 382 number because gold had sold off so much, $200 an ounce. You can see the ABCD pattern here in the silver. That's the same pattern that we had in the S&P here this morning up there at the 40.61 level. Now you just notice that we've broken below the 382 level. So you come down really hard, you drop $2 an ounce, and then you can't rally, and then you break below it, and we got all the way down into this area here. That tells us that we're still going lower. And the reason why we need to know that is because if you're watching both gold and silver, and if you're watching them, and what are we doing? We are watching them. So that tells us that we are looking for lower prices. The thing that we have to be aware of is you'll notice this large A, B, C, D pattern right here, and then it follows through with an A, B, 382 BC swing, and look, it comes right up within 10 cents of the exact high up there at 25.03. We got to 24.98 as I recall, and then we've broken all the way down. We dropped over $3 an ounce so far. My guess is we should get down into this area. I'd like to see it trade just below 2100 or 2050 for maybe a day, and if it can hold that, then it got a really good chance. That's the one that would give you a really big move to the upside. So those happen very infrequently where you catch some of these really major moves, but when they do, they can pay huge dividends. As you know, we have been very bearish bonds for a very long time, and the bonds exhibited the same type of action today. I don't think I have the bond one ready, but I do not have that one ready, but by golly, I'll have it tomorrow for sure, and we'll take a look at it, and I'll show you. We had the same swings in bonds. The 382 number came in at 128. The high was 128.03, and we've already dropped two handles, $2,000 down from 28.03 down to 126.08. So that's another reason to watch these numbers, unfold. What we're going to do here in another hour from now at 3 o'clock New York time, I'm going to be going over some of these major stocks that we've been watching and showing you the same sequence of numbers in stocks that we're looking at here in the commodity markets, because if it's tradable and if it has buys and sells, it's going to follow these numbers, because all you're doing is you're measuring fear and greed, and that's what it happens to be, and it's measured by the numbers of sacred science, which are the square roots of numbers 1, 2, 3, 4, and 5, and also the Fibonacci summation series, and that's why we're paying such close attention to these each day when we come here and talk to you about some of the things that are going on. One of the questions that's popped up here, why do I feel that silver will go to $60? I think it actually go higher than that. The reason why is we've been to $54 an ounce 3 times in my tradable life. First was 1980. That was January 20th, 1980. Gold hit 865 that day. We hit it again in 2019. It came in just almost exactly at $50. And that was the second time, and I can't remember where the other time was, but there's 3 times that silver has been up into that area. And if we ever get above it, the third, it's 2 times it's been there. If we ever get it above it the third time, then you're going to be looking at what? A 1.27 expansion of that. That's going to take you substantially above $60 an ounce, actually up to about $72 an ounce. So that's what I'm looking. So soon as we see a $60 print per ounce in silver, get ready for $72 an ounce for silver, because that's not very far away, 12 ounces at a time. And silver coins, these tokens and stuff, are still very, very difficult to get, folks. The prices have come down a little bit during this $3 an ounce drop, but by golly, it's still quite difficult. If you want 100 of them, you're going to have to wait or pay a premium. If you're going to get a couple in the coin store, sure, you'll pay higher price, but you're able to walk out with the coins. If you want a bag of them, 1,000, you're going to have to wait a while to get those, because those are just not out there very much. So you have to pay close attention when you want to buy them, so you have to order them. The reason why I know this is Byron Tucker's in the market for it, and he texts me each day, what the prices are and how long he has to wait to get them. So those are things you got to think about, that sometimes you want it available, it's not there. When gold was for sale in California back in 73, 74, 75, all the banks had all kinds of windows there. They had a buy window for gold and a sell window for gold. And you know what? There was never anybody in the sell window, especially when it was at 800 or 750 or 600. Nobody was selling it. Everybody was buying it. And that was one of the reasons I said, oh boy, the top is coming, because you got all buyers and no sellers. Pretty soon they become different fellers, and then look out to the downside, and boy, that's it. One of my best trading days ever was January the 20th of 1980. I had a heck of a move. I made a $200 move in gold in one day from 800 to 600, and that was fun. 877-927-6648. Stay tuned, folks. We've got a little wrap up, and then we'll be back at 3 o'clock to do Tom O'Brien's show.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, I posted a chart here of the New York Stock Exchange Index. This is the one on the lower half of the chart here. I'd just like to show you can see all of the big A, B, C, D patterns that are there. You can see that recently we just had one complete up here. I'm not doing the ratios or anything like that. What I wanted to do is to show you this is the ratios of the advanced decline line, showing you the same patterns that we're seeing in the stocks, which is the upper chart, which is the S&P. We're seeing same types of ratios in the advanced decline line. And the reason why is it's just a number that's calculated. And if you have a number that's calculated, that tells you that you're able to do it. Does it follow the ratios? Amazingly so. Look at this. From your high down to your low, 61% retracement. The A, B, C, D measures perfectly down here. It rallies up to a 382 of this high right here, pulls back to exactly 61% retracement, goes on to complete the A, B, C, D to the upside, and so forth and so on. So that's why these numbers are so important, folks. You either join the club and find out what these algorithmic traders are doing, or you just roll the dice and pray for the best, and sometimes that's as good a strategy as anything. I can attest to that after many, many years of experience. Now, tomorrow on my show, we are going to have Mr. Norm Winsky from Naples, Florida. He'll be our guest. And hopefully on Friday, we're going to have Stan Harley And we'll have 2 guests this week, and then next week we're going to have a full composite of guests that'll be filling up the thing, getting ready for March. Believe it or not, folks, only 2 more weeks and we'll be into March, and then 3 weeks after that we got the spring equinox, and spring is coming, and the old man winter will be leaving this horrible place. That's not horrible, just a little cold today. But let's take a break here, 877-927-6648, and we'll see you on the flip side tomorrow, folks.
Building wealth